Well, good morning, everyone. Thanks for waking up this morning at the right time and not being late to the opening keynote of the PaymentConf 2020, second day. So welcome, everyone. You are the strongest ones. So my clicker is not working, and when I resolve that, we can continue.
Oh, it is turned on. Oh my gosh. Wait, turn off, turn on. Whoa. Aha, magic.
All right, people. The world is changing in so many different aspects of life. And of course, in the payment card industry and in general in fintech as well. But this day is entirely focused on payment cards. And the payment card sector has been my professional domain of choice for the past 5-6 years. So I started in the acquiring business, doing it globally, then segueing over to the issuance business and giving out cards to customers. And if you find this sector amusing, then we have a lot in common. So my name is Erik, and I come from a company called TransferWise. And to kick it off, can you please raise your left hand who has built or launched payment cards in your life before? Who has done it in more than one country? Another hand? Still few hands. And who has done it in more than 5 countries? Please raise your leg. Okay, it doesn't scale. So the international and cross-border issuance is something that I will talk about. And those changes that are happening in the industry, there are changes that customers do see, and then there are changes that customers do not see. So I would like to actually focus on the ones which are invisible to the end consumer of cards. So something which is changing for the issuing institutions, primarily banks, but not only. And as this day is focused on payment cards, let's quickly also go through the history of payment cards in general. So when was the first payment card invented or introduced? Anyone? So it's actually a question with no definitive answer, because before cash was introduced, then currencies were really cumbersome, and carrying them around, if it's in an odd form of corn or some handcraft, that whatever was used to exchange the values, it was really complicated to carry that around, because it was also holding the intrinsic value, so it was also dangerous. So the invention of cash and coins was definitely a huge improvement. However, it was still not comfortable, and it was still dangerous. So humankind has always been looking forward and trying to find ways how to get rid of any sort of cash and find something which is easily portable and convenient and wouldn't have any real value in it. So different charge cards and tokens have been used actually for decades, but until mid-20th century, mostly these alternative payment methods were actually driven by merchants who wanted to implement loyalty among their customers, and they were building some internal closed-loop systems so that their customers could exchange goods with them without carrying cumbersome cash around. And it was the year 1950 where the first widespread payment card was introduced. There was a gentleman in the United States called Frank McNamara. He was having a business lunch in some of restaurants, and he discovered that he doesn't have any cash with him. And that led to an idea of implementing a identifiable and personal Diners Club card, which would allow customers to go to restaurants for a whole month without carrying cash, without paying, and then in the end of the month, only once, pay for all dinings. And of course, Diners Club, as the scheme and as the intermediary, would charge their own fee. And ever since, charging fees is something that schemes have been like really good at. And the end of 50s was the turning point where banks realized the potential of payment cards, so they started forming unions with other banks to develop the technology and to promote the adoption of new payment methods. And for example, in the case of Diners Club, to show how revolutionary it was, before that, widespread cards didn't exist at all. By the end of first year, there were already 20,000 Diners Club cards in the circulation. And so in the end of 50s, American Express has launched. In the end of 60s, the predecessor of Visa was launched, Bank AmeriCard. And before that point, all cards were always credit cards. So people, of course, love paying with money that they don't own. But in the end of 60s, the first debit card was introduced, so people could actually use the money that they hold on their bank accounts. And the end of 60s was revolutionary in terms of tech. For example, in addition to the debit card and like real-time charging and authorizations, first ATM was introduced, so you could actually use your card to get cash out. So that was magical. And about 10 years after the invention of the magnetic stripe technology, which was implemented by IBM, first magnetic stripe cards came into the use. So first, these were like access cards, but eventually it segued into the payment sector as well. So this time was revolutionary. And already mid-70s, the MasterCard predecessor, MasterCharge, was implemented, and maybe like the latest major scheme, UnionPay, came already in the next millennium. All right, so let's talk about their more recent innovation. And when we are talking about payment card industry and schemes, then this recent innovation might actually mean decades on a timeline. So we have witnessed a wide adoption of chip and PIN transactions. We have added the 3D Secure security layer to e-commerce transactions. We have seen the rise of contactless transactions, and like more recently, we are seeing a wide adoption of wallet tokens like Apple Pay and Google Pay. So for consumer, there is a definite and very like noticeable improvement in the experience, but actually for the guys and girls who are building those processing systems behind those cards, actually not much is changing. Because under the hood, we still have the notorious ISO 8583. So I believe that many of you have heard of it. So it's an old-fashioned, archaic, retro piece of technology that is powering transactions. So it's the financial messaging protocol. And there is definitely something about it. So I find it quite amusing and like charming. But even though the concept was actually implemented a long time before that, it got standardized 33 years ago today in 1987. All major schemes use it. Visa and MasterCard used the revision from 1987. Amex uses the version from 1993, and UnionPay uses the version from 2003. So let's say it's a 40 to 50 years old technology. And actually, it's used beyond the payment card industry as well. For example, many central banks use it to exchange financial messages. So it's 2020, and we are still rolling this old 50 years old tech. And because of its sketchy nature, because how old-fashioned it is, many engineers nowadays actually despise it. They call it a monster. But for example, I like history, I like vintage technology, some like retro things. So whenever I need to touch the processing code related to ISO 8583 messaging, I actually get some weird sense of pleasure. So let's take a closer look at what this notorious beast is. So when talking about ISO 8583, I like to use the railway analogy. So this communication protocol is like a railway infrastructure that schemes have established all over the world between merchants themselves and banks, and different schemes have built their own railways. Even though all those railways and trains look the same, the MasterCard trains can only drive on the MasterCard railway, and the Visa trains can only drive on the Visa railways. And if you happen to see a train on that railway, then in front of the train there is always a code name which is identifying what sort of message the train is carrying around. For example, 100 is always the authorization message. So when you swipe your card and the merchant wants to get the approval for the payment from the issuer, then that is the message that is traveling to the issuer. And each of those trains is actually has a certain purpose, has a certain code. For example, as I said, the authorization goes to issuer for the approval. It's the 100 message, and 110 is going back from issuer to merchant with the authorization result. So let's focus on the authorization example. Each train wagon is carrying some specific data. The first wagon is always telling which other wagons are attached. This is because not all wagons are mandatory. And these wagons are called data elements. And a few data elements worth mentioning are, for example, the card number, the currency of the transaction, the amount of the transaction, date and time. And some of those data elements are actually reserved for future use. So these are normally not attached, so that the train doesn't need to carry around unnecessary weight. And of course, when we are talking about electronic messaging network, then the weight means kilobytes. And actually all parties who are using the network are paying for those kilobytes that travel on the network. And there are hundreds of possible data elements. It's actually quite amusing to think how much data is traveling whenever you swipe your card. If many of them are actually supposed to carry just one single piece of data, like a value, then there are also some more complex wagons, for example, which carry a set of data. For example, like DE48, the additional data. And this is where the protocol gets interesting, because we are entering the new dimension. It turns out that these complex wagons can have their own sub-wagons, and these elements are called sub-elements. And again, some of them are mandatory, some of them are optional, and some of them are reserved for future use. So now let me tell you my own recent experience and use the hype of PSD2 and strong customer authentication. So how did PSD2 impact card transactions in general? So there are four main things. In Europe, chip and PIN is now 100% must-have. Magnetic stripe transactions don't exist. 3D Secure almost for all transactions is always mandatory. And now for contactless payments, whenever customer goes beyond 150 in total, issuer must request PIN entry. So like more or less, like on the average, each 10th or like 15th transaction usually will require PIN if both merchant and the issuer are compliant. So how it was implemented? In the additional data element, there was a sub-element called 22, which was reserved and never used before. And then, for example, in the case of MasterCard, they decided to call it multi-purpose merchant indicator. And now the next dimension, it can also carry its own wagons. And we call such parameters rabbit holes because you can go in and then you can find new turning points, find like new like sources of data. So you can just like go wander around there and find new ways how the data is presented and placed there. So in this, in case of this parameter, MasterCard and EMB Co organizations decided that it is going to be used between merchants and issuers to communicate, for example, whether merchant is compliant and is able to request the PIN on the contactless transaction, and if in case of the authorization message response, issuer is able to use this parameter to actually request the PIN and send the command to the payment terminal to request it. So as you can see, there was a parameter which was just adopted. Before that, it was unused until 2019 when it came into use. And similar, arguably very cosmetic and lightweight changes have been done to implement the contactless wallet tokens 3D Secure. So like, for example, if in case of 3D Secure, we have the access control server in between, the processing of the payment itself hasn't almost changed. These changes are very little. And in case of wallet tokens, we have some token lifecycle management flows, but again, the authorization and the transaction processing is not changing. It's like a time capsule. And even though this TCP-based binary communication protocol is all clumsy and outdated today, it was built to last virtually forever. It was built to scale, and it does its work done. So on the processing side, things are moving quite slowly. So where's the innovation? So definitely something needs to change in time, and I would say that the issuers and the issuing organizations are changing. And those changes which are happening on the markets, because the organizations who distribute cards are transforming, the schemes need to adapt, and they are starting to realize that. So to illustrate the substantial mutation of modern issuers, I'll use a completely fictional bank as an example. Let's call it a Bolt bank, completely fictional. And let's say that customers really love the bank in Nordic countries and Scandinavia, so it has good presence in Northern Europe. But all those entities of Bolt Bank are distinct. So not only their teams, their systems, their back offices, and the customer proposition is also completely separated, driven by different people in different countries. So these products and product propositions are distinct. And in the example of payment cards, of course, they issue their own cards in their own countries, and these products don't really overlap. So it's definitely not good or bad. That's just a historical DNA of issuers and issuing organizations, that how it has been done. And definitely this model has proven to be very successful. And this is like a convenient way for managing the international issuance for large banking corporations. But in the past 5 years, we have new breed of issuers on the block. So I call them the global super issuers. These are small issuing organizations with relatively small teams who from day one actually challenge the whole world. So their playground is in more than one country simultaneously, and they have a tendency to expand as quickly as possible. In most cases, these are just internet-based services, operate in multiple regions, very often are mobile first. Just a few notable mentions here. Potentially, one of the fastest growing ones recently has been the borderless proposition of TransferWise. And just in case, to give the background, so you know, for example, where I'm coming from. I'm coming from a relatively new startup which has been in the business for past 9 years. So our core product is actually international remittance. So we move money between borders and extremely strongly cut costs and time it takes to move money from one country to another. And at this point, we are moving in euros about 4.5 billion a month. And I believe that we are still a startup because depending on the maturity of the market, we are growing at least 50% year to year. And as our mission is to remove borders in finance for our customers, we came up with some novel propositions. And we implemented the borderless account, which is the first platform in the world which is offering truly multi-country banking experience. So our customers can hold money in 52 currencies and instantly convert them. So we also give out account details in 6 countries at this point. So for example, if you are the user of TransferWise and you have your paying customers in US, then you can just avoid opening the bank account in US, open it with TransferWise, we will give you account details and you can already send out the invoice and receive money abroad. Very convenient. And of course, use the main proposition of TransferWise, send money to 71 countries. And recently, that's related to this talk, we actually released our debit card for businesses and consumers. And all these services are offering the mid-market rate, so the interbank exchange rate that payment institutions and banks are using to swap money between each other. So that's the rate that you see on Google. And normally, it's not accessible for usual customers. And I hope it didn't sound like I'm trying to advertise because I just wanted to give the background. So now back to the card industry. We started in 2018, and since then we started like in the home market, the European Economic Area, then we added US, then we went to Asia and Pacific region, launched Australia, New Zealand, and Singapore. And right now in 2020, we have 6 more countries in progress, hopefully to be launched soon. So that growth has been quite exponential and a bit surprising. And I just gave you the background. So the next section of the talk will give some kind of insights and observations and possible predictions about what it's like to build an international issuer. And this is based on the things that we have seen so far. So now let's get to the main point. When launching the card in a new country, then this on screen is roughly the high-level to-do list that you will have when you know what you're doing. So when we were implementing the first card, we actually didn't know what we were doing, so we had to adapt and learn fast. So as we practiced, added new regions, rebuilt the setup in the old ones, we compiled a well-functioning framework that helped us to move fast and enter new regions. But even with this well-defined and effective framework and process, we felt that things are not really scaling very well when it comes to, for example, setting something up with schemes. Because the schemes processes of setting up new programs are not really optimized for those cross-country issuers. So in our team, we try to hold warm and diplomatic relationships with our issuer, with our scheme, MasterCard, but as well with Visa and UnionPay, spend time with their network engineers, reconciliation and clearing professionals and so on, because it gives us an opportunity to keep the hand on the pulse and be aware of what are the developments in the market. And so my assumption is that, and observation, that schemes are actually very smart. They understand very well the new nature of those global super issuers, and they have all resources needed to actually transform, adapt, and improve their internal processes to welcome such players much better. And I'm convinced that they will. So time is limited, and I picked 4 aspects of setting up the global program. So first, the time and effort that goes into registering the program and getting it live with like Visa or MasterCard. How clearing and settlement complexity is growing exponentially with every market that is being added. The draggy and troublesome process of setting up the technical integration with scheme, and how much effort it goes into setting up the multi-location card manufacturing all over the world. So if you have launched the card program before in your life, you will probably recognize yourself at work during those times. So there is a lot of bureaucracy, back and forth calls, email threads, filling out and in a lot of paperwork, organizing the key exchange processes. And when issuers are expanding geographically, then they actually need to deal with a lot of entities of the scheme all over the world whenever they go, because it's quite logical in the local issuance world that if you are launching in Asia, the US MasterCard is not going to be in touch with you. It will be the Asian one. So new contacts, new people, a lot of friction. And schemes are definitely aware. They see those new types of issuers coming. And so more than likely, they are going to rebuild their internal processes and tailor them for the issuers with global ambition in mind. So there will be definitely a tailored offering for international issuers where they can register a lot of kind of program the expansion plans into the initial paperwork and tell right away the scheme that in 1 year we will have that many countries and that many programs, so that a lot of this program setup work can be done upfront. And MasterCard and Visa can definitely orchestrate the internal collaboration between different entities of theirs much better than any external issuer could ever do it. And that development will definitely simplify and speed up the geographical expansion of issuers. And I would use one good evidence and example where we can already see such development, which is, for example, the 3D Secure. So recently, issuers and merchants have been upgrading to the next version of it, 2.1, it's not usually called. So in the past, when you were registering the old version of 3D Secure, you had to certify it with scheme and prove that you can process those authentications and your systems are compliant with all the requirements. But if you were going to the new region, then you had to do it again. Then you were going to the next region, you had to certify it again. So a lot of time, a lot of effort, again, a lot of unnecessary bureaucracy. So with 3D Secure 2.0, you need to certify your solution only once in any location in the world, and then you can just reuse it and enable it anywhere else. So there is no extra certification. You do it once, and it's applied globally. And so with new things, they are already adopting this global mindset. With the old ones, it will take some time to rework the processes and get there. But it's nice to see that it's already happening. Then the operations. When you launch one program, at first it's difficult, then you get used to it, your operations teams get some like certain approaches how to do it, and it becomes convenient. Then you launch the second one. It's a bit harder, but nothing crazy. When you have 5 programs, then you start to think that, okay, now you need to eliminate any unnecessary manual work. And if you have 10 plus programs, then you start to feel that actually the way how this thing works is not scaling at all beyond that. So as an example, let's take a look at basic settlement principles. For each program, issuers, when deciding to launch some card program, they need to define the base currency of the card and the settlement currencies. And for the sake of our example, let's say that it's a United Kingdom-based program. So the base currency is GBP. That's the major volume will be perhaps in GBP. And we might have 10 plus settlement currencies if we expect that our card will be heavily used internationally. And these are currencies in which issuers are paying out money to merchants after transactions. So if transaction happens in British pounds, this is easy. Pounds is our settlement currency. Most likely this merchant is also located in United Kingdom, so we just deliver pounds to the scheme. Scheme delivers it to merchant. And of course, settlements are combined per one geographical region, so scheme actually takes a big pot of money and splits it and distributes it correctly between all merchants that need to get their piece. So in case of US dollars, the same story. It's a settlement currency, so issuers just settle in USD and the scheme delivers this money to merchant. When it happens in Mexican pesos, which in this particular example doesn't happen to be our settlement currency, issuer needs to settle in the base currency, so default currency of the card, and scheme defines the exchange rate. This exchange rate is usually really good. Schemes are good at FX, and they offer a rate which is very close to mid-market. So here everything is fair, and then scheme is converting this money for merchant and paying out in Mexican pesos. So this way, all issuers in the world, wherever the transaction is happening, don't need to worry about the currency exchange. They just rely on MasterCard offering the FX function. So these principles are quite simple. But when you have many programs in different corners of the world, so all this logic starts to multiply, because now it matters what is the country of this particular program of the transaction, where is the merchant located, what is the currency of the transaction, what is the base currency, and so the complexity of finding these particular buckets of settlement, where to place this transaction and how to reconcile it correctly, the complexity is growing exponentially. So I have spoken with some architects of the reconciliation and clearing processes at different schemes. And they do recognize the need of cross-country issuers. And I have seen that there are some really enthusiastic people who are willing to change and improve this part and simplify the operational complexity for cross-border issuers. For example, today, only in GBP, we are doing like 6 different British pound settlements per day. So, out of millions of transactions, we need to find, particular ones which need to contribute to each of those settlements. So wouldn't it be just much simpler if we could just combine all GBP settlements and it would be only one settlement globally? So this is what schemes are actually interested in implementing. Definitely it's a hard task, but whoever of schemes introduces that will have a huge advantage in attracting those international issuers who get a lot of hype, and it's like probably like really good hype advertising these days. So now let's talk about the technical integration. This is quite interesting as well, the integration. So normally, issuers must have some physical data center, so they need to have physical presence somewhere in the world. That's why normally what happens when you integrate with scheme, let's say Visa or MasterCard, the technicians of the scheme will come to your rack in the data center. They will build the cage there. They will place their own proprietary hardware, which in case of MasterCard is called MasterCard Interface Processing Service, and in case of Visa, it's called Enterprise or Extended Access Server. So this is the scheme's hardware. So you pay about 60,000 euros for it, and the delivery takes between 3 and 8 months. Then the scheme, with their own efforts, at their own pace, with their own money, will build the direct connectivity to their own closest data center. So it will be a private line, not exposed to the public internet, reliable, fast speeds, and so on. So this direct link will be then used to integrate with schemes systems, and they kind of build it for free, but of course there are no free meals. They will be charging you on a weekly basis for the connectivity fee, and the minimum weekly fee is 450. It's tiered, so the more transactions you have, the more you pay for it. So altogether, with the rent of their technicians, with the consultancy time and all that, the cost is roughly $250,000, which for most serious issuers of the world is not a big deal, but something else is. The need for physical data center and the effort and the time that is needed to set that all up, this is the problem. Because welcome to the 21st century, the era of cloud, where probably a lot of potential future issuers and their processing partners are willing to actually implement their systems in cloud, to set clusters there and set up processing nodes there. So they don't have any physical certain presence. It's distributed between multiple regions of Amazon or Google or Microsoft. And schemes are definitely recognizing this change in way of setting up the infrastructure nowadays. And they are willing to give an answer to that and implement the solution for such issuing institutions. So there will be most likely 2 different phases of this development, at least based on discussions I have had with schemes, network engineers and architects. So most likely the first one, which won't scale well, but might be the initial solution, is that schemes will be hosting this special hardware for issuers in their own data centers. So the same direct connection can be used. So most likely their data centers are already linked with all major cloud providers. And so the first challenge here is that before that, the model was completely different. It required physical work. So they will need to re-establish the pricing setup. But most likely, it's not really a problem because they can still charge the connectivity fee. So instead of issuers paying for the hardware, they can be still paying it, but it being located in another location. But it will not scale because schemes cannot be just hosting the hardware for every issuer in the world eventually. So the next phase of the development, because this MIPS or EAS hardware in reality is just a server with some Ethernet ports, which runs some specific schemes software on it. So it all can be virtualized, and most likely it will be distributed as an image, which different cloud-based processors can just run in their cloud clusters. So it's a highly probable development. And again, schemes can still charge for the connectivity, and then they can ask the license fee for running this image of the MIPS server in your cloud. So this will remove the burden and the need for the physical presence, and when expanding geographically, that is definitely going to be a major improvement, because that is going to remove a lot of effort and time to set up programs in new locations. And the last one that I wanted to talk about is the production of cards. So regarding this one, I have seen, at least at the biggest producers and manufacturers of the world, that they are actually already technically ready. Let's say Thales, or previously Gemalto as an example. So today you can start everywhere, anywhere in the world, but if you add the new location, you can use the previous technical integration, old SFTP or API communication protocols, and just enable the production in new places of the world. So technically they are there. They don't really offer it yet as a ready-made product, but we can definitely see the evidence, because they are capable of doing that, and they realize that international issuers are coming. They will be quickly adapting and expanding this offering globally. So I think if you will be building the global card programs sometime in future, I believe that your future is bright. Everything is going to be amazing, and whatever today isn't the most convenient one will significantly improve over the years. Thank you.
Thank you, Erik. But it's still not all, because we have questions for you. Pom, pom, pom. People have been active. And there's one super hot question for you, which is, are you building capabilities in-house or using service providers regionally?
Yeah, it's a good question. So I think at some certain level of maturity of the issuer, it is inevitable that technical teams will start into setting up their own processing capabilities. We have integrated 2 processors, but our system is built in a modular way, so that all the decision-making, authorization processing, clearing, report processing is happening in-house. And then we use the modular architecture to connect different providers. So for us, it doesn't really matter if we are using the third-party processor or we are directly connected to Visa or MasterCard. The core architecture is the same. So most of our traffic today, 100%, is actually using some third parties, but it might change, never know.
I hope it's answered. Did you consider using a white label card issuance service provider?
So I believe that this is definitely also the model that could work, and probably could work fast. But I think it also has some downsides, like you are losing control over a lot of setup and maintenance operations. So in our case, we have never considered that. So whenever possible, we get principal license at the scheme and operate fully everything in-house. But there are some markets where, for example, finding the affiliate licensor for the scheme is better choice. For example, in the United States, that has been our approach. So we have years of relationships with a few banks in America. So because in US you need to be licensed in every state, and getting licensed in 100% of states takes a lot of time. If needed, then we are downgrading and using the affiliate membership. But in other locations, we have been just going directly.
Okie dokie. Why only MasterCard is supported?
Well, it all comes down to finance. So in our case, we started with the scheme that was offering the best commercial proposition for us. But again, because we are very closely talking all the time, like both with Visa and even Union Pay in Asia, and like right now, I think it's the golden time of issuance in general. With introduction of wallets, there is a lot of interest towards organizations like that, especially if they are like operating in many different countries of the world. So we have like really warm ties. Potentially one day we will add something more, especially if it will help us to offer something better for our customers.
How are you managing AML issues?
So we have 9 years in the fintech sector of experience. So we have a quite huge dedicated AML team in TransferWise. So, and the card is one of the freshest products. As you can see, we just started in mid 2018, and so it's like less than 2 years in the market. So of course, having a big team that already has processes in the international remittance, they were like giving us a lot of guidelines how we need to implement our systems. And you know, nowadays in a service-based financial architectures, I mean microservice, where you have like message brokers, it all comes down to the communication. So if we have a dedicated finance team, then everything that happens on our card platform is being sent out as asynchronous messages to them, so they process it asynchronously, and if something, or like synchronously, and if something is not right, then they inform us and catch. So we have all dedicated functions within TransferWise, so whenever we implement some new product, so most likely when it comes to compliance or like financial auditing, then we already have all the capability to fill that gap. We just need to establish technical relationships between those particular teams within the organization.
What is challenge of 3DS for your card holders? Is it performed via your app?
Yeah, so when we built 3D Secure, we just replicated whatever we have for our 2FA, because we didn't want to introduce any new experience to customers. We wanted to make sure that when they will be paying with card, they will be getting exactly the same experience like whenever they log into TransferWise and go through the second factor. And from the regulatory perspective and from the security perspective, 2FA with some certain life cycle is mandatory for us and for our customers. And our 2FA experience is the primary option is the push notification to the verified device. So you have to apply the fingerprint and prove that this is your transaction. So you say yes or no. Number 2 is the SMS. And number 3 is the phone call. And when you are an international issuer, then phone call is really useful thing, because most likely your customers will be traveling a lot, so they will be going to some exotic countries where they use the card, or where they happen to use the card when they are online. And then we figured out that SMS in many cases doesn't work with roaming services, but phone calls have 99+% of well-functioning statistics. So that's why, as the third failover solution, is to make the robot call our customers and tell the one-time password.
Okay. 2 more questions. Why potential phase 1 won't scale?
Yeah, so let's just have a drastic example. Every issuer in the world and their processing partner decided to move to cloud. So that would be a huge overhead for MasterCard or Visa to get a lot of physical space in their data centers. So that's why, because this burden of setting up things is transferred to the scheme, I believe it won't scale, and most likely they don't want to be dealing with that, because scheme is one, and issuers, there are thousands of them.
Okay, and last question. Is your card issuance domain profitable? What are income channels? Only interchange, or are you taking something from card holder?
Yeah, so today we don't take anything from card holder when they order the card. That might change. In general, transactionally, our cards have been sustainable and profitable almost from day one. It took some time to figure out like few things and cut some internal costs. In terms of charging, we do charge for ATM withdrawals when it reaches 200 euros monthly. So after that, we take like relatively small percentage in the industry. But yes, most of our customers have like very international lifestyle, so they do a lot of cross-country purchases, and as our core product is the FX and the remittance and the exchange of currencies for them, we pick the best pair that they have on their account, and we do the conversion for them. So they save on the exchange rate, and that's where probably the bigger portion of our revenue comes with cards.
Okay, ladies and gentlemen, let's give a round of applause for Erik.